It's a lot of pressure with that introduction. Like they said, this is presented by Maygarden Center for Financial Literacy and Gulf Winds Cares Foundation. So just a really big thank you to them for hosting it. UWF's the reason we have all this great food in the back and a really great room to be in. So shout out to them. So kind of why are we here today? We're going to cover a really broad range of topics. This is going to be a little bit of the legal side of starting a business, some potential scams and pitfalls that I saw, a lot of things people run into. The pros and cons of running a business. It looks like I've got kind of a good mix of my audience today. So for people that are considering whether or not it's worth it to open something up, we're going to kind of go over that. And I'm going to spend a little bit of time on writing a business plan. And there's a little bit more in here too. So pros and cons. So for those of you that are on the fence about starting something up, I'm a little bit biased. I have a little side business myself I've been running, and I've had a lot of friends open something. And for everybody I've seen do it, it's just very rewarding. Even if you have a full-time job, just to have something that's kind of yours, it's your baby, you did it all by yourself, you own it, it's just a really rewarding process. And of course, who's gonna complain about a little extra cash? So that's also a huge benefit. And for me, it was a lot about learning new skills, having to build a website, be a little bit of the marketer, all the kind of little management things that go on, client retention. You just kind of learn a lot of really cool things. I'm not going to be too biased though, because we kind of do have some cons here. There can be potential risk. We had a lot of people come to us that had a really grand idea that was going to cost them 95% of their savings, things like that. If you put a lot on the line, there's a chance to lose a lot. And honestly, for most of them, it can be time consuming. There's days after work, I don't want to work another 2-3 hours, but you kind of have to. So while the rewards definitely outweigh the cons in my opinion, just kind of something to think about. Now when I say risk, this is one of the biggest pitfalls I would see small business owners run into. They would always want to dive in head first on a capital heavy project. They'd be ready to sign that 3-year lease on a brick and mortar, buy $150,000 in equipment. And sometimes that was a great idea. If you're starting with the capital and you can afford the risk, not saying you shouldn't go for it, but for a lot of business, the biggest advice I had for people and all of my fellow consultants would give you, find ways to start small if possible. If you're looking to sell things or provide services, you don't need an office to be an accountant. You can just do it using cloud services. If you're looking to start a retail stall, look for things like Palafox Market that costs, I don't know, it's like $75 a month now or something like that. Get a proof of concept there. See if people are interested in your services. Get a little bit of word of mouth going. Once you have maybe a cult following, then maybe it's a little bit better idea to start that 3-year lease or whatever it is. But I like to recommend people start small and get a proof of concept before going head first on things. And a lot of this right now we're talking about is the preliminary part of starting a business, but even if you're running a business plan right now, one of the things I found not a lot of people have is a business plan. They would come to us with questions, and while I'd love answering questions, a business plan is going to answer 80% of your questions right from the get-go. So I would just call this the foundation of starting or even continuing to run a business. It's just a good way to get ideas in paper, and this isn't your academic APA formatted business plan that you did in business school. This is just, honestly, scratching ideas down on paper is the best way I like to describe it. People look at a 9-page business plan template and they go, holy cow, this is my whole weekend gone. Don't think of it like that. I just like to think of it as just sort of a quick way to answer some questions. And it's obviously a great way to maybe avoid some unexpected pitfalls that maybe you answer a question and you're like, hey, this would have been a problem that I would have gotten to, but now you're prepared. So you're going to find millions of templates out there. I took a very simple one. Executive summary, of course, is the start. This is just the summary you write last. Once you're done with the business plan, this is your final run through of everything. Hey, is it a good idea? Is there anything I missed? But more importantly, let's kind of just start from step 2 here. Company description. What does your company do? Sounds pretty straightforward, but honestly, a lot of business owners I talked to, some of them didn't answer this question. So what is the purpose of your company? What niche in the community are you solving? Where do you fit in basically, and what's your identity? Pretty quick one, but products and services, another thing. Sounds common sense, but this is a really good thing to sit down and just write a quick paragraph or two on. What are you selling? Where does it fit in? Are you better than the competition? Are you cheaper? Do you do it better? Are you more client focused than maybe some other service areas are? Things like that. Think about where do you fit in? Where are your strengths? And also, this is a good time to start thinking about weaknesses as well. So we know who we are as a company, we've got our services and our products nailed down. And like I said, these aren't 5-page things. These are just quick, honestly, write a paragraph or two real quick. Go from there if you want. But now we're looking at market analysis. What's your competition? One of the biggest things I saw a lot of people want to open a retail shop. They want to open a restaurant. They want to open businesses in these really high competition areas. And I'm not saying don't do that. I think it's great. But if you're going to open a business in a more general industry, one of the biggest things you need to do is analyze your competition. Is this something that Pensacola has room for? If you're going to be a restaurant, are you going to be more fast service? If you're going to be competing with things like Jackson's and Restaurant Iron, is your food that great? Things like that. Just think about what you're selling and how it compares to your competition. And another thing too, a lot of businesses, if you're in a really niche industry, you don't need to be in a really high traffic area. If you make some weird fitting for some very specific type of factory, you can be in a really cheap industrial area and you don't really need to pay a ton of rent to be right on Palafox. So just kind of little questions like that. What does competition look like? Think about demand, things of that nature. Marketing and operations. I know this kind of looks like a wall of text off to the right, but just kind of to get the general idea of what we're talking about here. Just kind of think about what you're going to do to market and operate the business. For most businesses, this is going to be very straightforward. You're going to start off with one employee. Marketing is going to be very basic. But now, I do like people to kind of think about marketing because one of the things I noticed in years of consulting was people didn't do a lot of basic things. You have a ton of free tools out there nowadays with the internet. I mean, think about Google offering a suite of free services that you can take advantage of. And I'll get more on that actually in a second, but operations, just a general term, are you going to need employees? Are you going to be operating this 40 hours a week? Think about that. Are you going to need a partner to operate this? Things like that. So I like to just throw some quick marketing tips out there because like I said, this is a really easy way for businesses to get ahead. And it was crazy how many businesses I saw that were missing one of these things. Every single thing on this slide also is completely free. So first of all, social media. Just a really great tool off the bat. Instagram, Facebook, they're all free. They're all free to create a business page on and just start posting things, adding friends, adding family, giving your customers a way to share your image. So just make sure you have some kind of presence on some of these platforms. A Google business profile takes about 5 minutes to set one up, costs $0. This is if somebody Googles your business, it's got your business name, phone number, website, some pictures, just an immediate landing page. Because if somebody's Googling businesses and they've got 5 show up that have really great filled out Google business profiles and yours doesn't, guess who they're not gonna pick? Probably you most of the time. So having a Google business profile is just a way to stay in the competition. Google website too. A lot of businesses I see just starting out don't have a website. I'm not saying you need to go out and have the prettiest, most perfectly put together website in the world, but I'll tell you this, I'm an accountant, I'm not a creative guy. I created a Google website in about 20 minutes. So if I can do it, I promise any of you can, because if somebody's gonna go to your Google business profile, click on that website button, they wanna see something that kind of looks like this business exists. And then of course, always ask customers to leave a review. These are just kind of the quick things I noticed that people don't do. So if you're gonna start a business or you already do and you're not doing any of these things, I would recommend going out today and getting started. Management and organization, another really big one. Are you going to run this on your own? It sort of fits into operations I was talking about, but this is where you really drill down on this. So do you need partners? One of the biggest mistakes I see business owners make is they want to be partners with their friends right away. That's great if you guys have a plan for this and have kind of a fallback option if things go sour, but most people just give away equity immediately for free. I mean, if you're going to have your friends in on the business and you're giving 50% away, make sure there's a reason that they earn that 50%. I saw so many people, their friends would be 50-50 with them, and they would always come back to us in 4 months and say, hey, he's not really pulling his weight, but he's taking a paycheck, and we're buddies, so what do I do? And I'm like, well, you're kind of in a bad situation now because it's kind of between the friendship and that. So just kind of think when you're starting your business, do you need to split equity? Because I'll tell you, most of the time, it's better just to run it on your own until maybe later down the road when the business is more fleshed out. And finally, we've got financial projections. This is my favorite part, and I know it's most people's too, because it's the most fun part. So this is where you really figure out, is this business feasible? And now, just kind of keep in mind, you don't need to be an accountant to do this. This is a very simple, high-level income minus expenses equals what you take home at the end of the day. That's all these are. So you can, of course, get more drilled down than that, but just to start, just to keep it less intimidating, income, expenses, net income. That's all I care about here. So this is a really big part of uncovering those kind of hidden pitfalls in a business. This is where you go, okay, I think I'm going to make $500 a week. It's only going to cost me 100. And then you look into your financial projections and you're filling out the insurance column and you're like, well, dang, my insurance quote is $300 higher than I expected. Or, wow, the places I would need to rent are actually significantly more expensive than I thought. And I have to stick with that price for a year. Turns out employees are more expensive than you thought. Things like that come up in the financial projections. And also, I'm just going to plug this right away. If you're doing financial projections and you're getting stuck, SBDC is a great resource. So, like I said, don't need to be an accountant. I would just download a free template online, or you can just open up Excel. But essentially, without going into this for hours like I could if I wanted to, because like I said, it's my favorite part. I could talk about these for 4 hours, but I think we only have about a quarter of that. So just be realistic with yourself. That's going to be my main advice here. And as far as revenue goes, just kind of think of scenarios. If you're selling things at Polhlopek Market, think, okay, how many people typically are going to walk by your stand in a day? 500, 1,000? I'm probably even way off there. But just sort of think, okay, this many people walk by. 2% are going to maybe stop and buy something. What's the average amount they'll spend? Multiply that to get your revenue. Just kind of some quick scenarios. Think about what a bad day looks like. Think about what a great day looks like. Just kind of have a range of what to expect here. Doesn't need to be perfect at all. In fact, it can't be. It's an unknown. So just try and get close. And expenses. Just kind of think about what you'll need to run. So if you're going to be a vendor and you want to set up a Polhlopek Market, the vendor fee to be there is the first thing. Maybe you need general liability insurance. Generally pretty cheap. Are you going to hire somebody to watch the stand for $10 an hour when you're not there? You know, things like that. Just sort of think about how much this place will cost you to run. And then you'll get a pretty good idea of if it's worth it, because one of the things some people find is they end up at the end of the day with the financial projections saying on a good day you're making $50 after everything's said and done. Some people say that and they say, okay, this isn't worth it anymore. I'm going to look for a different business. Or some people say, hey, I just want to do it for the fun because I don't care. But what I find is it at least gives you a really realistic picture of what you can expect, because I think a lot of people just kind of overlook what they may make. So overall tips on a business plan. Like I said, we're not getting academic here. This is just a quick download a template that asks you general questions. Hey, how many, like I said, little things that you might have not thought about in the beginning. Because a lot of people go, oh, dang, I didn't think that I might even need employees, or I didn't think that I would even need a space to operate my business that might cost me money. So just use it as a thought exercise. And like I said, honestly, my biggest tip is just to be honest with it. I think a lot of people kind of have the optimism when they're writing their business plan and they go, oh, half the people walking by are going to buy $100 worth of things. I'm like, no, okay, we can have that as our good scenario, but let's have a lower one than that. So being honest with yourself would be my biggest tip here. All right, so preliminary stuff is out of the way. We've done our business plan. We said, okay, great, business plan looks good, financial projections look good. I'm going to go ahead and start this thing. So one of the very first things that I see people get really confused about that's in actuality very straightforward is choosing your structure. 99% of businesses are going to start out one of two ways. There's a sole proprietorship, which is just me, myself, and I running the business. No legal structure. And then there's an LLC. For most people that are starting a business, and like I said, this is a very quick workshop. We're not going to get into partnerships and S-corps and things like that. Feel free to come up after or ask questions after, but I'm taking a really broad overview here. The LLC pretty much just has a little bit of separation between you and the business to protect you in the case of potentially a lawsuit. Now, the thing I like to tell people in the beginning, though, is when you're choosing between a sole proprietorship and an LLC, that LLC is going to be a little bit more expensive. It's going to require annual filings, and I think it costs about $138 to renew that now. Now, a lot of people see the LLC as this magical legal shield that if anything goes wrong, that they're good to go, and that a judge isn't going to, rule a certain way. The legal system is very complicated. I'm not a lawyer, but one of the first things we tell people is your LLC doesn't protect you all the way. If you're negligent and you only have a certain value of your business, there's a chance the judge might just roll right through that. So don't pay this just in the event that you think it'll protect you. If I have a business that's a higher risk business, that maybe a good example is like a parasailing business. So they're taking people up in the air every day. It's very risky. Something goes wrong, you have injuries. They have insurance for that. They don't bank on the LLC protecting them. You have specific insurance that protects you in the event something goes wrong. So don't go that route just because you want the protection. It's kind of my overall advice. And as far as filing goes, a sole proprietorship is very easy to create. I honestly, you're gonna kind of hear some bias in my voice, and I don't know if y'all can already tell which one I recommend people get on day one, but it's usually the sole proprietorship. There's not really any upfront costs unless you wanna operate under something that is a name other than your own. So so instead of me saying Kyle's bookkeeping services, I wanna operate under Pensacola bookkeeping services, I now have to get a DBA for that. It's just called a doing business as, and it's $50 every 5 years versus $138 a year for eternity. So I usually just recommend people start in column one, and then as their business progresses, let's say you decide you're making money now, you want to upgrade to a corporation or a partnership or something else, you can always go get that LLC down the road. Starting out as the sole proprietorship, which saves you, in my opinion, $138 isn't chump change. So I'd say it saves you significant money, especially in the preliminary stages. I just recommend people start sole proprietorship if they don't have a reason right away to go with the LLC. Additional licensing. So of course, we've done it a bunch of times at the SBDC, so to us, getting a business started is fairly easy. Most people really only need a couple things, either filing that DBA with the state or the LLC, and then you need something called a BTR. They don't really make it easy. They don't really make the name make sense, which isn't really helpful, but it's called a business tax receipt. Everybody needs one of these, and this is a general business license. Literally, no matter what you do, if you operate in Escambia County or Pensacola, you gotta have a BTR. And they're only about $26 each. So a lot of businesses are like, well, I only sell $50 of stuff a month. I'm like, just get the BTR. It protects you in the case something happens. They don't really audit it ever, but I just say for $26, it's worth it just to be legal. Little fun fact though, So let's say you operate at Polhlopek Market. That's my main example today. Sorry if y'all hate that example, but it's the only one I got. That's in Pensacola city limits. So now you have to have a BTR for Pensacola, the city, and a BTR for Escambia. And a lot of those vendor markets, I think they actually check if you're up to date on all your business licenses and stuff. So just kind of keep that in mind. If you were in Pensacola city limits doing business, you got to get 2. And if you go over to Okaloosa County a couple times a month to do something there, you got to get an Okaloosa BTR. So just kind of keep that in mind. Anywhere you do kind of significant business activity, you have to get one of these for that area. So, and then of course, a lot of people open businesses or acquire a couple extra things. So your main governance here is going to be the Department of Business and Professional Regulation. So they have a really nifty part on their website where they have a list of all of the types of businesses that they regulate and how to get a license through them and all that kind of stuff. And again, this is going to be one of those where there's so many types of businesses I could sit here and cover, and half of them I don't even know what they need. But this is one of those, if you have a business and you're like, Kyle, I have no idea what licensing I need, SBDC is another great resource here. Go to them, they'll sit you down and go through this whole process. But just keep in mind, if you're something that seems like it might need additional licensing, it's probably a good idea to look into it. Make sure you're good to go. And some of my favorite stuff here is the business obligations. So we've got our BTR going, we have our LLC registered through the state or DBA or whatever we decided to go with. Now we've got some things we have to pay people. As with everything in life, there's somebody we got to pay. So here it's going to be sales tax. So if you're a business that sells goods, certain services, or rents, I'm going to pretty much just stick with selling items here just to keep the examples nice and easy. But you pay this to Florida. Everything you sell, y'all see it on all your receipts all the time. It's 7.5% in Escambia County. If you're selling clothes or anything like that, in certain situations, you're going to have to pay this starting quarterly. So it starts out quarterly. It's due on like the 19th of the month after the quarter. So quarter one's due April 19th and so on. This is something you need to register for on your own. And if there is one tax that if a business is behind on something, they're behind on their sales tax. And I like to just bring this one up because the state does not play around with their late fees and their penalties and all that. So this is something I always tell businesses, hey, if you're going to sell any kind of item, make sure you're registered here. Make sure you understand how to pay it. Generally, it's about 7.5% on everything, but just make sure you're aware of this. Again, this is something I could talk for 2 hours on, but just for this presentation, just be aware of it. Federal taxes. My favorite thing. I used to get to do these all the time. So paid to the IRS, of course. It's just with your normal taxes that some of you have probably been doing for years. So this is going to be due once a year. If you're either a sole proprietorship, like I said, just you yourself doing business, or you're a single member LLC, so not partnerships, not S corps, not anything like that, this is just going to be due with your regular taxes. It's pretty much just an extra sheet of paper with your income statement. And of course, that's oversimplifying things, but pretty much doesn't add a ton of burden to your taxes. I even have clients that after I give them a quick walkthrough of how to file everything, they're pretty comfortable doing their taxes on their own. Usually based on business net income. So that's just, you're going to pay taxes, your income minus your expenses. And like I said, putting it simply, but that net income's generally what you pay taxes on. So we have some frequently asked questions. So now we figured out, okay, we might have to pay sales tax. We're a little bit aware of our federal tax obligations because everybody pays the federal taxes. A little bit aware that exists. And one of the questions I would get asked all the time is, how do I pay myself? And like I said, I really wish I just had 7 hours for you guys to talk about this stuff. Wish we had dinner ready in the back, but unfortunately we don't. So I got to go kind of quick through this. So assuming you're a sole proprietorship or a single member LLC, this is going to be the easiest business to pay yourself out of. You're literally going to take cash from your business bank account and you transfer it to your personal bank account. That's it. There's a little bit of nuance that goes into it on the tax side, But when you're actually, and you have spare cash in your business, and you're like, well, I need some cash to go do something. That's literally all you do. You transfer it from your business bank account to your personal bank account. I can do a really long explanation for it, but basically that money at the end of the year that you've transferred to yourself has already been taxed. So it does not affect your business income. If you sold $5,000 worth of stuff and you paid $3,000 in expenses, your net income's $2,000. And let's say you took $1,000 out at the end of the year just in cash to pay yourself, your net income's still $2,000. It hits a different line item, but they call it an owner draw, if you'll Google this afterwards. So let's say we are ready to start the business. One of the biggest things I like to really get into personal finance about is because anybody that wants to start a business loan or funding it yourself, having a solid personal finance situation is a great way to do it. So self-funding, of course, is number one. If we're starting a business that's relatively easy to fund, it doesn't need a lot of supplies from the get-go, mainly just pulling the money out of your own savings account. Easiest way to do it. The biggest mistake I would see people make, though, is they would have $20,000 in their savings account and they'd be the business costs $15,000. And I'm like, but what if your kid has an ER visit and you have $15,000 in yarn sitting around now? So just kind of something to look out for. So I would just recommend just kind of be careful about your personal finance situation when you're funding it on your own. Think about what your own risk tolerances are, but this is the easiest way. The most common one is a bank loan. So let's say this business is a little bit more expensive to start. So let's say you need $200,000 in equipment and you need to build a building or something like that. Most people are going to go the bank loan route. Bank loans for a business I'm just going to be straightforward with you, they're very difficult to get. You need great credit. You need at least 20% down usually. And they're only going to be offered for certain industries. What I found is most of the fun businesses that everyone wants to start, kind of tough to get a loan for. I'm talking retail, restaurants. Banks don't really like those industries. So if you're thinking of starting something like this sometime in the near future, my biggest advice is start saving, start working on your credit, and make sure you have a really strong case for opening the business if you're going to need a bank loan. And like I said, some industries are easier to acquire a loan for, but if you have a business that is going to require something like this, we used to work with a broker that would buy and sell businesses a lot, and they were usually very expensive businesses, $500,000 plus. His biggest advice was, this is a 5-year plan right here. If you're going to get a bank loan, think about it 5 years in advance and start saving, getting everything in place then. Of course, people do it quicker than that sometimes, but it's a good general rule. And here's the one I got asked about the most. Kyle, do you know any investors? Investors are pretty hard to get, if not pretty impossible for most industries. And in my opinion, most of the time, not a really great route to go down. One, like I said, difficult to find. The ones that I saw actually get investors would get terms way less favorable than what a bank would do. I mean, you're talking bank will give you 7-8%. I'm not sure. I haven't looked at the rates in a while for a commercial loan, but something like that. An investor would want 10 to 15% over time, almost a payday loan. And you're talking about giving away equity in your business. So investors, in my opinion, unless it has something like maybe they're bringing in human capital, maybe you're in an industry that requires significant connections to get access to certain things, maybe it can be worth it then. But generally, investors aren't a good idea for places that don't need them. If you are interested in finding investors, let's say you have this great business idea and you think people would be interested in it. I'm not saying investors are impossible to get. So if you do believe this is something somebody would be interested in, start networking now. I would always recommend people go to chamber events. They're great. You can meet a lot of different varieties of businesses there. There's actually something in this area that's really cool. I don't know if they're still doing it. John Mike can tell me if I'm wrong here, but it's called Million Cups. And it's basically, they would meet down over at the co-work annex downtown, and new businesses would come and speak for about 5 to 10 minutes on what their business is in front of a group of local business owners and just people involved in the local community. And basically you could just pitch it. And I don't know if anybody ever really got a deal out of presenting there, but I know a lot of people, if they had a good idea, ended up coming out of there with some good connections. So Million Cups, great place to start. All right, so we are going to talk about my favorite part and everyone else's least favorite part, the accounting side of it. So every business I would see come in, they've probably got their marketing down. They love talking to customers. They're doing a great job in 90% of the things running a business requires. But I'd say, okay, like, how do your books look? They're like, books. And I'd be like, yeah, you've been doing business for like 8 months. Have you started on that? They're like, no. And so this is one of the last things I saw people would ever get started on. And then it comes tax time and they're freaking out because they have a week to get it figured out. So I would say one of the main things is good accounting is critical to starting it. And here's the thing, when you're starting a relatively simple side business, accounting doesn't really need to be a big deal. Honestly, what I recommend for most people is just make sure you have a separate business bank account and a separate business credit card that you pay everything through. And then at the end of every month or every couple months, you just download an Excel version of those statements. Pretty much every bank offers that service now, and you just categorize it that way when you're starting. If you're just having a couple transactions a month, that's the easiest way to go about it. And for a lot of businesses, I do recommend, if it's simple enough, honestly, if you're the type of person that likes learning, look up a couple of YouTube videos on just basic startup accounting. You don't need to go out right away and pay somebody $300 to $400 a month unless you decide that that's worth it for you. Again, another great plug for the SBDC here. If you have no idea where to start and you absolutely hate the thought of accounting, which I can't imagine why you would, but if you do, the SBDC is a great place to go. So, like I said, bank statements, you don't have to sit there and pencil everything in a book and do the old school accounting. You can just download the bank statement. It's got everything that happened right there. Most common platforms, real quick. Excel. I love Excel. It's my favorite thing in the world to be in. My wife doesn't agree. She doesn't enjoy when I talk about it as much as I do. So I understand that most people might want to do something like QuickBooks. And I'm not a QuickBooks advertising guy. It's just what 90% of people use. So that's just what I put down as an example for accounting software. But it's a really great place to start if you just hate the idea of Excel. Just have a basic QuickBooks. They have a really simple option that I think you get it's like $10-15 a month for the most basic version. And of course there's other software out there too. So obviously look around. So let's say you just decided that everything I said sounds horrible, you're gonna hire an accountant. I totally get that. So I just like to kind of prepare people to how to shop for one, because most people, they want an accountant, they have no idea where to start. Do I get a CPA? Is a CPA? Is a bookkeeper fine? What kind of questions should I ask? So a lot of people, the big letters, the CPA, it's kind of what everybody kind of goes for first. A bookkeeper is totally fine, and it's honestly where I kind of route most people. A good solid bookkeeper can be a little bit cheaper than a CPA. Can do most of the things a CPA can do as far as what a very small business would need. So I just like to kind of tell this to people. Don't think that somebody has to have those letters behind their name to do your accounting. It's not true. CPAs are going to be a little bit more expensive. I'd tell people if you have a complex, very niche business, like construction's always a great example. Construction stuff is got a little bit of curveballs to it. Maybe a CPA for something like that. But just go find somebody that's in your price range, has good reviews. Most of them are going to offer you an hour just to sit down and talk with them, see if it's a good fit, ask a couple questions. I like to always just ask, what's your experience in this kind of industry? Obviously, just kind of make sure they have a good, solid reputation. But yeah, just go sit down with them for that free consult and just ask some questions if you're sure this is the route you're going to go. Common scams. So this was actually really common. I didn't think it would be as much as it was, but when you file that sole proprietor, that DBA or your LLC for the first time, your information's out there now. Everyone knows who you are if they want to find you, and there are businesses who make it their life's work to just skim that list every day, and they're going to find out, hey, this person just opened a new business. I bet he wants some insurance advertisements. 50 of them to his mailbox every day. They're gonna find you. And some of them look pretty legitimate. I found some that have like the state seal on them, and I don't even know how that's legal, but they do it. So they literally, it would look like you forgot to do something on your registration and you need to pay them $100 today. So I would just recommend calling John up at the SBDC if you're unsure if it is something you need, just saying, hey, is this something I need to pay? 99.9% of the time, it won't be. So just keep that in mind. LegalZoom. The part that hurt me the most was somebody that scrimped together their money to start this business that some of them even just wanted to do it for fun. It's not a business they really even wanted to make a lot of money with, but they go and they give LegalZoom $400. LegalZoom will probably never sponsor me because I just talk all kinds of bad things about them, but registering your LLC is not something that's worth spending $400 on. Don't pay them to do it. They'll offer to do your EIN with it too. Getting an EIN is totally free. And if you go and you look at the Florida website to register your LLC and you're like, this is an outrageous process, I don't want to go through with it, I'm thinking about giving LegalZoom my money. The SBDC will do this for you. You go sit down with them for 30 minutes, they'll literally walk you through this whole process. So don't go to things like LegalZoom. You don't need it. Go to the local SBDC, but just make sure that there aren't really fees for filing this stuff. So if they're going to charge you a couple hundred, you're probably in the wrong place. So that's pretty much the end. I know this is a really brief, fast presentation, but now's the time for any questions y'all have. I'm sure there are tons. I know this is very exciting. Yes. So she asked if you don't need to get a DBA if you're an LLC. So an LLC is already going to be under the different name that you want to operate under. A DBA is for if you don't want to do an LLC, but you still, so if like me, I'm Kyle, I just want to open up my accounting firm, let's say, and I'm like, I don't need an LLC, but I'm going to operate under something that doesn't have my name involved with it. Because if your name is in the business name, you don't need a DBA. Even if it has a couple extra words, the DBA is for if I want to operate under something totally different and I just pay the $50 to the state. It basically just says, hey, this is what I'm going as. That's all it does. So an LLC generally won't need a DBA unless it operates under multiple names. Yeah. So the question was, and correct me if I'm wrong, but basically if you did a lot of business with somebody, a sales tax exemption just makes it so that when you resell materials or you put them into something that gets resold and you charge your end user sales tax, that the sales tax exemption lets you not pay the company's sales tax. So basically you're not double paying sales tax. So he's saying if you're a sole proprietorship and you don't have that sales tax exemption, well, if you're a sole proprietorship, you can still register with the state to get that sales tax exemption. You don't need a specific structure for that. So yeah, so basically, if you're going to open a business that needs to purchase inventory in order to sell it, you would basically go to who you're buying the stuff for, and when you register with the state, they give you this certificate for free, and you basically just show it to who you're buying things from, and then they just know not to charge you sales tax. And then when I go and resell that stuff, I charge my customer the sales tax. So that's so it doesn't get charged twice in the process of buying things and selling things. Y'all are easy on me.
Thank you, Kyle.
Yeah, thank you. Oh.